in the government and the private sector use the authentication and eKYC methods of Aadhaar. And the second thing was that the innovations done at NPCI started by building the IMPS, the immediate payment system, which has been a very important lifeline for remittances of migrants, and a very important system at NPCI. And then NPCI and UIDAI worked together to build two important things. One was the Aadhaar payment bridge, which was the basis for direct benefit transfer. And the other was the Aadhaar-enabled payment system, which allowed people to withdraw money from a business correspondent just by using their Aadhaar number and a biometric. To give you a sense of the scale of this and the importance, in the recent crisis when many migrants went back home and the government put DBT money into the accounts of Jan Dhan account holders, the Aadhaar-enabled payment system did 400 million transactions in May and again in June. And millions of people, I think about 150 million people, withdrew money, small amounts of money from the bank accounts using Aadhaar-enabled payment system, essentially through a network of private companies that are business correspondents. So this has shown the kind of innovation that has been there. Then, of course, the other important innovations at NPCI have been the Bharat Bill Payment System, FASTag, which is again used on our highways for contactless payment, and so on. And the most important and most forward-looking, of course, is UPI, or Unified Payment Interface, which today has become a great innovation used by many users. More than 100 million people, I believe, are using UPI. And last month alone, it did 1.3 billion transactions. And as per Mr. Asbe, the architecture is being designed to go to 1 billion transactions a day. And as you know, as part of UPI, again, there have been a series of enhancements. And just prior to my talk was the launch of UPI AutoPay, which is the recurring mandates. And this is a very important thing for subscriptions and EMIs and SIPs and other things, where you need to set up a business rule that repeats itself as a payment every month or every day or whatever frequency that you want. So clearly, India has become a hotbed for innovation in identity and payments. But the third big thing which has been done is what's called as the account. It's fundamentally based on the premise that data should be available to people to use for their own good. In other words, how can we empower people to use their own data to get better credit, better education, better healthcare? And the account aggregator architecture has been devised and is now getting rolled out. We had a launch of this a few months back in Mumbai. Now, the account aggregator system itself is a generic architecture which allows data from data sources to be given to data users through by a consumer's request using protocols, security, and so on. And account aggregators are nothing but entities that provide the role of managing the data on behalf of the consumer to take it from one provider to one user. And the architecture of AA can be used in any industry. So while it's obviously very useful in the financial industry, equally well, it can be used in healthcare or skills, education, and so on. Now, in the financial sector itself, the account aggregator framework has been supported and led by RBI. And I know that many companies are looking at becoming account aggregators. So again, a whole fintech ecosystem is getting evolved using the account aggregator framework. Now, while the framework again can be used for many activities in financial services, be it in lending or stocks or wealth management applications, personal finance, whatever, I think the most important one and the most immediate one is how do we apply this architecture for lending? Because India really has to do something about providing credit for its most deserving and the smallest businesses and individuals that we have. Because while on the one hand, we do have a large lending portfolio, and in fact, we also have an NPA crisis. The fact of the matter is that small companies, micro enterprises don't have access to credit. And therefore, most of the credit goes to large companies in large volumes. And basically, there are a couple of reasons for this. One is that the cost of lending is very high because if you use a manual method, if you have people going and finding out details, it's very difficult to do small value loans. And therefore, the tendency goes towards making large loans. But the smaller companies and the street vendors need very small loans. And unfortunately, they don't get access to that from the formal financial system, and they get it from money lenders and loan sharks and family and so on. So one is the cost of that, and that cost, fortunately, is coming down thanks to the digitization that we have done. So today it's possible to think of an end-to-end credit cycle, which is entirely digital. Loan origination, loan underwriting, loan disbursement, loan repayment can all be done digitally thanks to all the infrastructure we have in terms of identity, UPI, account aggregator, and so on. So one way that we're able to expand the reach and allow millions of small businesses to get access to credit is because the digital underpinnings, the infrastructure that is coming up, is going to reduce the cost of loans. And therefore, you can think of smaller value loans, shorter duration loans, high frequency loans. All that is now possible because of the digital infrastructure. But another equally important thing to make this happen is the data part of it. Because one of the reasons that small businesses don't get access to loans is because there's no data about their business performance. And that data asymmetry has a big impact on their ability to give loans. And that's where the account aggregator system helps, because now increasingly data is now possible to be possible about the different activities of a business. For example, if you're a small business, your GST data, which is available with the GSTN and which you can request on your own behalf, the GST data, which has all the invoice details and so on, can be used by a small business to get a loan. Or you have all these marketplaces like GEM and others, where again, the volume of data of what you sell and buy on those platforms gives an indication of your business strength. And that can be used again by you to give it to a lender to ask for a loan. There's also this whole street vendors to have access to loans. And if the street vendors can go to digital payments, then the history of their digital payments can be used to give them a loan and so on. So increasingly, the two big things are being addressed. One is the digital end-to-end loans, which allow you to reduce the cost of transactions and therefore make it viable to give small value, short duration loans to small businesses. And the second is we will have more and more data stores which can function as financial information providers using the account aggregator network. But to make all this work seamlessly, you need a way to get multiple small units who have access to customers to be able to interact equally well with the lenders. And for that, you need a protocol. And just like UPI was a protocol for payments, there is something now which is getting developed called the Open Credit Enablement Network, OCEN, which allows you to connect lenders to marketplaces who in turn lend to a lot of players in their industry. And this essentially acts as a common language between lenders and borrowers. And that's very important to have a common language, just like UPI provided a common language between debit and credit and so on. And it allowed us to create this huge ecosystem. Open credit enablement through protocol also enables that. And this is something which is going to have a big impact, because if this is done, then for the first time, we can truly democratize credit and make sure credit reaches all the small companies and street vendors and so on. Today, I think the Open Credit Enablement Network or protocol is ready for discussion. After this talk is over, sometime today, I will be tweeting a link to the iSpirit blog site, which talks about this, because iSpirit has been leading this effort to create this protocol. The good news is that many of the lenders are willing to adopt this protocol. And now we need marketplaces, or what in the jargon of this area is called loan service providers, to be also adopt this protocol, and which then allows them to embed loans in their daily working. For example, if you're a small company that provides the tax uploading facilities to its customers, then you can also provide credit to them, and you can embed the details using the protocol and offer it to the lenders. The lenders will use their automated underwriting tools and give a loan. So you can actually go to a model where you can give small, high-value loans in real time with good underwriting and instant credit into the bank account of the borrower. So the concept of loan service providers is a very important, and therefore anyone who is in the business and has a number of customers can now extend that business by also enabling credit for those customers, not from their balance sheet, but by passing it through this protocol and getting lenders, be it a bank or NBFC, to lend, and all this can be automated using this protocol. So this Open Credit ML protocol is a very important thing. And shortly after this talk, I'll be also sending a tweet. So do look at the tweets on that. So I think, let me come to the end of my talk, which is that fundamentally, has become a hotbed of fintech innovation. The journey began 10 years back with the inception of the UIDAI and NPCI. And over the last 10 years, we have seen enormous innovation. Whether it's Aadhaar with its authentication and KYC for the entire population, whether it's IMPS, which has been a fundamental bridge for remittances for migrants coming into cities, whether it's FASTag, which has enabled contactless payment at trucks, whether it's the Bharat bill payment, which enabled bill payment to grow, whether it's UPI, which has become a world-famous payment system with its latest edition, UPI AutoPay, and now with the account aggregator and its specific implementation for lending through the Open Credit Protocol, which we think will have a dramatic impact on enabling the really deserving small businesses to get access to loans and really democratize credit in this country to get the economy moving again. So thank you all for calling me, and have a great event.
Thank you, Nandan. That was I think there's an echo. Is somebody on? Can you hear me okay?
I can hear you, Naveen.
Okay. So thanks a lot, Nandan, for taking time off and then giving us a great, awesome outlook as to what are things and where it is going. By the way, if there was a title of probably father of a digital India, probably it will go to you, looking at the number of digital layers that you created for India, right? Starting from identity, going into payments, going into data, working on health. So from here, where do we go in next 5 years towards our journey of digital India and everything being a digital economy and digital India? What more is missing?
Well, clearly, I think from a fintech perspective, many of the pieces are now falling into place. And I think also the COVID crisis has increased the pace of digitization. More people are using video conferencing, more people are doing digital payments, more people are using online e-commerce. So I think something that would have taken years is getting compressed into weeks and months. And therefore, I think we are going to see a huge thing of this. But I think the areas where we obviously need to apply digital technology is, one is to the area of healthcare. And there again, I think there's a lot of work going on in the government, in iSpirit, others, to create a health stack and to see how we can improve the quality of healthcare, provide more telemedicine, provide doctor registries and electronic health records. And I think the government has realized in this crisis that creating a digital health infrastructure is very important. We already have seen great success with many of the health applications from the health ministry, as well as the National Health Authority, which has rolled out the Ayushman Bharat, which is a national portable insurance system with over 100 million families benefiting from that. So I think we are seeing that in healthcare. The other area is clearly in education, because again, we are seeing the crisis where, because children can't go to schools, we have to provide other means of providing education. And there again, the Diksha program of the government, which enables millions of teachers and children to get access to online education on their desktops, on their smartphones or on the phones, has become very important. But one thing we have learned from all this, Naveen, is that when we develop public systems, it is not about just satisfying the top 50 million people in the country. How do we get 1 billion people to participate? Like in payments, we can use UPI on smartphones, we can use UPI on feature phones. And for people who have no phones, all they need is an Aadhaar, they get a bank account, and they can withdraw money using AEPS. So we have to have a solution for everyone in the country to be inclusive. So that's one thing we should keep in mind when we think about these kind of public systems. But to put on your unmute.
Sorry. So it's very interesting perspective. You're absolutely right. There is one question that has come from audience. The other 2-3 questions are on similar flavor. Like you said, whenever any such public good system is designed, it's designed keeping the larger masses who are excluded to bring them in fold. So there are 2-3 questions which are around similar thing. That UPI, we've done a great, it's amazing global story. It's doing extremely well. But all said and done, other than this last 1 quarter, probably cash still has been king. And there are still ways or obstacles because of which the cash is still not reducing and the adoption of digital payment is slow. What do you think, what is your guidance for fintechs, and what are the areas that we should look at to kind of bridge this gap where even a common man, so what is happening at the bottom, you have a person with Aadhaar enabled payment, you have the top code using through app, but in between, about 50% of the population is still falling between the cracks. So what do we do about it?
I think it's a great point. Actually, during the demonetization, one of the things that NPCI did was completely rebuild their feature phone payment app and made it UPI ready. But I don't think that app I don't think the UPI through feature phone is being used that much. And I think you're right. I think UPI has got 1.3 billion transactions, but they're mostly smartphone users, either for P2P or P2M. And Aadhaar-enabled payment system has enabled 150 million people to withdraw money from the bank accounts. But in between, people who are not in the sort of benefit situation, nor are they in the smartphone, I think we need to do something about getting the feature phone enabled payments going well. Because even today, we still people who use feature phones, and they will take some time to graduate to fast phones. So I think if somehow we can get and I know that there are attempts being made to make the feature phone payment become more attractive. I think if that is done, then everybody comes into the payment system.
Yeah. And like we put account to account system very well. We put the Aadhaar in. Now, is it time to also add debit, credit, or any such instruments along with the UPI and let customer decide whichever instrument they still want to use, but it still works seamlessly through that?
Well, I mean, obviously, UPI is already an instant debit, so it debits your bank account. So it already does the debit. However, there is, I think, one of the things I know. I headed a committee on the deepening of digital payments for RBI, and we talked about some of these things, including this AutoPay kind of feature. I think OD on UPI is there. I think it's allowed. But it may need to become more user-friendly or something. I don't know exactly where it is now. But once you have an overdraft capability on UPI, then you can create a credit product seamlessly. And I think that's also important because that will help in reviving the economy. Because if you want consumption to start, then you need to be able to have access to credit easily for buyers when they are doing an online transaction. So I think that's something which needs to be activated.
I think amazing point, Nandan, because we've also seen globally the payment, especially digital side, has always moved more from a credit because of the customer confidence and a trust immediately kind of increases. So that shows we are trusting them. by giving them the credit. And if you remember, during the committee you were chairing on digital deepening of digital payment, we also talked about innovating in credit cards and allowing access to fintechs, etc. So there is also a question, since you also talked about the SME lending, the micro SME lending, cash flow based lending. I hope that system goes live soon, because actually there's an acute need just now. If the system like that comes now, I think that the game is going to be a complete game changer. And maybe probably you could still put more focus as to a small businessman, how would they benefit from a system like this? And again, how a role of a non-bank becomes more clearer. Because in past, like we saw, UPI came, but it took, let's say, about 5 years for a non-bank to get directly latched onto it, while they work in a collaborative bank-led model. But some of those things probably in a new model, because sometimes new entities have a higher energy to drive these new initiatives faster.
Oh, absolutely. I'm a strong believer that you need to create digital public goods and public rails.
Yeah.
And identity, payments, and account aggregator are examples of public rails. Yeah. But to complement that, we need the energy and innovation of private innovators. And we have seen that wherever we are able to, even the internet is a good example of something that was built by the government and then led to private innovation, Google, Facebook, Amazon, and so on. And similarly, the GPS, which gives you the lat long of any person, was again a government innovation by the US government. But that led to ideas like Ola, Uber, and all these new apps. So I think fundamentally, this combination of public sector, infrastructure, and private innovation. And that's exactly what we think will happen with this open credit enablement network, because you have lenders who have capital and they want to lend to the smaller businesses, but they're unable to do so far because of high cost and because of data asymmetry. And now we have solved the problem of cost by making it a digital play, fully digital. Yeah. And the problem of data asymmetry is solved by virtue of the account aggregators. Now we need marketplaces who have access to a set of customers to access this pipe and access it in line. That means I should use the API inside my whatever business I'm doing and put in a loan request at the same time. And that's what this open credit protocol is all about. And I really hope that it's very critical we do it now, because one, it democratizes credit to millions of small businesses who don't get credit. Number two, it provides credit to consumers also. And number three, if you want to get the economy revived, we need to lubricate these small businesses with capital so that they can get on with the business. So I think it's very important, and I do hope that this will get accelerated in the coming months and years.
No, you're absolutely right. I think most of these small businesses need 3 to 6 months of extra lubrication just to get their business kick-started. And in absence of physical, digital is the only solution if they have to still drive the business. There's some interesting question around that. There are also some interesting platforms like GEM by the government on a e-procurement side. How do we see implications of those platforms in these new stacks that we do in, again, fintech context? Like you said, they can simultaneously probably apply for the loan, or do you see some more possibilities around those platforms?
Because it's creating a marketplace, and government is able to use the power of its own procurement to get vendors to provide products and services on the platform. And I think they have had amazing leadership right from the beginning. I think the advantage you have is that you now have digital transactions of both buyers and sellers. So if you're a supplier on GEM, then you have a digital footprint of what all you have sold. And that data through the account aggregator framework can be used to give you a working capital loan. Or if you're a buyer on GEM, that also indicates how big you are as a business. So both buyers and sellers on such marketplaces can now participate and get credit from lenders, and they can get it seamlessly in real-time instant credit using these open credit protocols. So yes, all the pieces are falling into place for different kinds of markets.
So there's one more interesting question from audience, and I also relate to it. When it comes to financial services regulator, we always hold the sector like securities market, the whole banking side, payment side as really doing a lot of activities. But when it comes to insurance, which is one of the highly under-penetrated market, there are still challenges. I mean, we continuously hear from the industry that even if they have to put out one advertisement on a website, or even for an example on a TV, it actually needs to go through script by script, the entire thing. We're living in a very different era. Do you think there is something different needs to be done there there are still silos that if you are a life insurance payer, you can only sell life. If you're general, you can only, while the whole world in the financial services thrive on cross-sell. So do you see some shift required even in these multi-regulator regime, since we don't have one single regulator here?
Well, I really don't know much about the insurance sector or the regulator, so I won't be able to comment on that. But we do have something called the FSDC, the Financial Stability Development Council, which is all the financial regulators sit on that body with the finance minister chairing that body. And that is the right place to think of inter-regulator coordination. In fact, the account aggregator framework, which has been anchored by RBI, is actually approved at this level. And the good thing about these ideas at that level is then all the financial regulators adopt it. Similarly, like KYC, now all the financial regulators now I think use Aadhaar KYC, video KYC and all that. So I think at least at a transaction level, I see much more coordination. I'm sure more will happen in the coming years.
No, that's, I think, good news. And hopefully with people like you who keep sharing the vision and then helping the country architect in the right framework, that will be amazing. And we hope we reach there soon. And thanks a lot, Nandan. Again, thanks for taking time out. And
thank you, Navi. Thank you for inviting me.
Thank you.
Thank you. Bye-bye.
Bye-bye.
Thank you, sir.
Yeah. Okay, bye.
Bye. And thank you, Naveen. Thank you, audience, for wonderful.